Hi, I'm Pete Andresen. I'm with Andresen and Associates Incorporated. We are fee-only money managers managing wealth in Salinas, California. And I got to tell you, I got my third COVID shot, my first booster. My first two shots were Pfizer's, and this time I got a Moderna booster. And I think that was the right thing to do. I think all of us, pretty much, almost all of us, are striving to do the right thing. We don't necessarily know what the right thing is. We're struggling through mountains of information and disinformation. And I think people need to choose what the best thing is to, the best methodology to cope with this COVID pandemic. So I got my Moderna booster and I've been tired. So I wrote this video to tell you what's going to happen in 2022 on December 7th, the 80th anniversary of Pearl Harbor. But due to some technological glitches and the fact that I pretty much slept all day Tuesday, I am filming it today. So here we go. Let's see. The purpose of this short, I hope, brief is to discuss what's going to happen in 2022. Again, this was written on December 7th, 2021. There's a lot going on with 2022. This is for my clients. I am reaching out to you because it appears that you prefer this to Zoom meetings and newsletters. And I welcome your feedback. Let me know if this works for you. If you want printed newsletters instead, how would you like content delivered? But we have a lot to talk about concerning 2022. A lot's out there. If you're not my client, keep in mind that nobody has a crystal ball. These are my opinions. Perfection is impossible. Investing is imperfect. Everybody's imperfect, even those Bitcoin warriors out there. Financial markets can go down and up. Historical trends have been astoundingly good, but things go down too. Keep that in mind if you're not my client. Consider this informational, not investment advice. First thing that came to mind when I was writing this on December 7th is that we live in an error-filled world, and the 80th anniversary of Pearl Harbor does give us the opportunity to kind of consider the tragedy of that mistake. The mistakes were mostly made before the war started, and nobody knew they were making these mistakes. That's important to keep in mind as we look to the future. Somewhere out there, we're all making mistakes, and we're doing our best, but we're all making mistakes. And some of us disagree with what with others' choices, and perhaps we feel very strongly about our own correctness. However, we're all making mistakes in regards to the future. And I'm sure that's happening for me as well, although I'm trying my best, just like everyone. The thing that happened with Pearl Harbor was that the Americans didn't realize the Japanese would attack after they embargoed the Japanese, especially their oil. But they had good reason to embargo the Japanese. The Japanese had been killing about 1 million civilians a year in China since 1936. Google the rape of Nanking. Both sides had a bit of racism. Frankly, the Japanese had more racism than the Americans did. Americans get accused of racism, and some of that is absolutely correct. But there was plenty to go around on both sides, especially the, frankly, arrogance of Japan. America had a lot of arrogance too in regards to what they thought the Japanese could actually accomplish. So again, arrogance on both sides. But we forget the imperial Japanese government of that era was totalitarian and murderous in the extreme. One of my comments that I make to my children as regards World War II that we're still recovering from, by the way, 80 years later, we're still profoundly shaped by World War II's experience with 50 million dead, is that the Japanese government killed millions of its own citizens by putting them in a place where the enemies of Japan had no choice but to respond. If you're killing 1 million civilians a year in China and you pick a fight with someone else, then you have just brought down the whirlwind on your citizens. So mistakes were made, and we live in an error-filled world. Omicron, COVID update. One of the reasons I got that Moderna booster. This is going to be a big event in 2022. Could be a positive event. I mean, COVID could go away by the end of 2022, or it could become dire in 2022. Pandemics don't last forever. So my bet is that it should decline. I'm hoping that it will decline in some way. Omicron, at the variant Omicron from South Africa, as this graph shows, seems to be extremely, just stunningly contagious, just astonishingly contagious, but doesn't seem to kill lots of people at this time. So can't say it's back in the news. You know, COVID's back in the news, but at some point this too will pass, and vaccines seem to work. The bigger issue for me as an investment advisor managing your money is that the Federal Reserve, since about 2008, has created bubbles in the real estate, bond, and stock markets. They've done this by unprecedented intervention into the economy and into the financial markets by absolutely pushing down interest rates to absurd levels, and by which promotes excessive speculation and killed the bond market, as I'll show you, and by buying treasuries themselves, which boosted money supply off the charts. And the other thing that it did was it very much provided an opportunity for the United States government to spend vast deficits. Here's what happened in the housing market. The housing market in 2008 fell this is all over the United States. So we're talking about Arkansas and California. Average price fell down from about 240 to about 200,000. And here you see it rise up where it's over 400,000. So it's doubled since 2008. And that is not just California, that's everywhere. And the reason is you've got a flight from California going on because of high taxes and loss of quality of life. Now, have they damaged the bond market by compelling real negative rates of return after inflation? So here's the thing. This line here is, the red line is inflation. If you can see, it rises up and falls and rises up. Inflation is not permanent because it kills the economy and it promotes regime change. And the new government, not being idiots, realizes that you don't want to have inflation. So here's our nominal rate. That's the interest rate you get on your bond when you buy your bond. A bond is an IOU. You loan, let's say you're buying a treasury. That's you loaning the government money, say for 10 years. That's the maturity date. And they say, the government promises they're going to pay you interest for the next 10 years, semi-annually. And that interest rate is the nominal rate. So let's say you have a 10-year bond at 2%, which is about what, it's actually lower than that right now. So your nominal rate is way down here. But if inflation goes up, that means that the spending power of that 2% drops dramatically. So what you're seeing is that let's get to the Depression, when the opposite happened here. When the nominal rate was this black line, there was deflation. The cost of living went down. Right here, that's the red line. And the real rate of return went off the charts because, you were really making money then because things were going down in price and you had a fixed income. That's wonderful. The opposite is true now. We have a 2% interest rate, let's say, inflation of, let's say, 7%, So that means your real rate, what you're really getting on money, is -5. And what does that do? That drives people, because everyone thinks short term, drives them into Bitcoin, drives them into speculation, drives them into the stock market, drives corporations to create debt, drives them into real estate. What happens when that changes? And it will, I'll get into that. The Federal Reserve has also really caused excessive debt creation. This is all-time high. Global debt is at 300 trillion and way over the top of GDP. They're not going to be able to repay it. What's going to happen is governments will either monetize the debt, which means keep long-lasting inflation, which will create regime change and thus political chaos, or they will, or corporations will move the bonds into stock, which will provide stock market dilution, which will put downward pressure on stock market prices. So the Federal Reserve has created a problem. The other question we're going to go back a little bit, we don't know whether that will play out in 2022. We don't even know if it's going to play out at all. It's likely that we'll all muddle by and we'll just have lower economic growth at some point. Has the stock market entered a permanently high plateau of overvaluation? Or will the stock markets, I should say, correct at some point? Using the Buffett indicator used by Warren Buffett, billionaire successful investor, we are now 63% overvalued, but we've been overvalued for 5 years. In the past, every time it's gotten overvalued, according to this indicator, it has fallen back down. The Federal Reserve, by pushing down that interest rate, has kind of forced people into the stock market. Let's see what happens. My guess is that we'll all muddle by, but with extreme risk. And I could be wrong. The other thing that's really important in 2022 is that shortages always lead to gluts. That means that what is rare now will become common later. If you were ever in the cattle business, as my family was, you knew that if cattle prices were high this year, next year, everyone was going to have a cow in their backyard, supply would soar, and the price would plummet. Happens in everything, even gold. This is Top Glove Corporation out of Malaysia. This is the start of the pandemic. And there's a shortage of rubber gloves. So they're producing rubber gloves, and they're producing and producing and producing, and more factories are being built, more rubber gloves all over the world because we need them because of COVID. Profit margins begin to bind because suddenly there's a surplus of rubber gloves and the profits fall for Top Glove, and the stock price is essentially returned to where it was at the beginning of the pandemic. Shortages always lead to gluts. So inflation is likely to subside simply due to oversupply, which is going to create, you know it, problems of its own, such as a slowing economy. And what does the Fed do then? Prime the money supply again and drive it back? It's kind of painted itself into a corner. A key feature is that we tend to think the world will look like this forever. We tend to think that shortages will last forever. We tend to think that the stock market will stay like this forever, whatever this is. When the markets are down and they get really down excessively, the reason they're down so much is that people think it will stay like this forever. And of course it won't. People will think that if the stock market is high, that it will stay like this forever. And of course it won't. It'll go on, it will come down a bit. I mean, it's not going to blow up or anything, I don't think. Haven't seen any big meteors out there lately, but things change. Things change a lot. Look at my hair. I mean, I started life with a big brushy full of head of hair, and here I am. So things change, even though we do think that the world will look like this forever. Vanguard, I've used this in my past presentation. Vanguard thinks that the expectation for the next 10 years is a 2.4% to a 4.3% US equity performance with a bond performance of 1.3 to 2.3%. So rather dire, and built into the, not dire, that's mediocre would be a better word. It's a mediocre expectation. And built into this is the reality that stock markets usually don't do 2.4% a year for a decade. There's a correction, a downturn in there somewhere, which will be temporary. And that's very important to keep in mind. Temporary. And predictions like this have often failed over the past 5 years because the Federal Reserve has intervened like crazy. And it could be, although frankly, I doubt it, that we're in a new paradigm. The outcome for the last decade was much better than expected at the beginning of the decade. We don't know what will happen. Perhaps the good times will push forward a few more years before we have any kind of correction at all. Perhaps we are in a new paradigm. Perhaps we can live with these overvaluations. Right now, we're somewhat conservative in all your portfolios. It's been a wonderful, wonderful year, and we are conservative with your portfolios in general because of these concerns as we go into 2022. But in the past few months, I've noticed that the financial markets have been surprisingly mildly down. On my individual stocks that I'm working on with you, clients, I've noticed that the stops have blown out. I put stop losses underneath stocks, and the stock prices have dropped through those. So there is a downturn underway in the last 3 months. Is it anything big? I can't say. 2022 is going to bring us challenges, but in history, usually we just muddle by. That's what usually happens. But are you ready if the financial markets turn volatile? And that's big. Are we emotionally prepared? Because when the market drops, if that ever happens, if we aren't in a new paradigm and the market does drop, stock markets do decline, I am going to buy in your accounts because that's what we've been waiting for with our conservative portfolios. The whole reason for being conservative at this late stage bull market is that we have kept our powder dry so that we can buy when a correction happens. Are you emotionally ready for that? It's big. Now, if I don't hear from you, I'm going to keep our positions relatively low risk allocations. But if you disagree with that, if you disagree with what you're hearing, if you're thinking, I don't think Pete's got it right, then call me, email me, get in touch. And you're not happy with the performance of your portfolio in 2022. Oh, excuse me. You're not happy with your performance in 2021. Call me, let me know, and we'll move you up the risk scale, being fully cognizant that something's out there. It's like seeing last night's rain clouds. It wasn't forecast to rain. I looked out and I said, looks like it could rain, but you really don't know if it's going to rain. Can't really say it will rain. Nevertheless, at 3 this morning, there I was looking out the window at pouring rain. So it does happen from time to time, even in California. Keep in mind, I expect any downturns to be possibly intense. I mean, the media is going to be shrieking, but not permanent. I'll say it again, I do intend to buy. Thank you very much. Happy holidays. Merry Christmas. Blessings.